Welcome to the Train the Trainer program brought to you by the University of Hawaii CTAHR, the Western Extension Risk Management Education Center, and USDA's National Institute of Food and Agriculture. I will be your host for this session on financial record keeping. Our objectives we're going to cover today, it's a lot. So we're going to look at the purpose and value of financial records, types and uses of records, and implementation of a system, and then some additional, I'll have a list of additional and resources and references used. Purposes of financial records, some of this is going to be kind of repetitive in terms of what you heard last week from Stuart. So taxes, loans, eligibility for government programs, these are things a lot of people think of financial records as being used for. Sometimes we also think of them in terms of valuing assets. One of the last things I feel like it's often used for is decision-making tool, but it is a really important one in order to make decisions in terms of things like cost of production and what is your actual profit margin, things like that. It can be a really, really valuable tool for benchmarking and long-term purposes. So again, a lot of times people think of the financial records in terms of the IRS. So we have our farmer's tax guide here as just an example. I know that that was brought up last week or the week before last. And so you get your summary of business transactions, documentation to support your transactions, and then assets, and then other entities like cash flows, debt to equity ratios, and assets and values. So ways to keep track of records. There are a lot of ways to keep track of financial records. QuickBooks specifically has an ag option, which can help populate some categories and has different reports specifically for agriculture that can be pulled. Quicken is also a potential option to use in order to keep track of financial records. Both Excel or Google Sheets is also an option to keep track of records. There is also the old pen and paper option, or this one that I feel like a lot of people have seen at some point in their life, or it's just an accountant's joke. I don't know. However you choose to look at it, it's the old shoebox with all the receipts. I'm going to exit out of the PowerPoint and we're going to do a financial records activity. So as you can see here, this is going to be what the records are going to look like. And we're going to go to that from here. Now, so for each of the following transactions, I tried to just create a few, but I'm going to ask that each of you go in here and pick one of these. So I only have 7, so this works out well because there are 7 people on here. I was like, so if each person could pick one and then actually fill it in the description. So I see Andrea or Kirsten, it looks like you're on number 7.
Yeah.
Okay. So yeah, so like how it says paid $5 for each for 100 potted orchids. So you can just copy and paste that into the description. And then you'll just put however much in either the expense or the income section. Does that make sense? Okay, yeah, you guys got this. Thank you very much. And it looks like they're all in there now. Okay. All right. So all 7 of them are in there. For the paid for shipping, so 3 bags of doo-doo fertilizer for Acme. You got that one right. That was good. I was like, I'm going to maybe have to bleep myself now. 3 bags of fertilizer for Acme comes to a total of $180, giving us a current account balance of $820. We paid $10 or paid shipping for 10 potted palms. And that was $35 each. So I'll just change that really quick to $350. And then sold 10 potted palms at $100 each. Yes, that was $1,000 into income. Thank you. Paid for household electric bill. Okay, $100, and then sold 100 for 20 each. Good job, 2,000. I paid 5 each for 100 of these, 500, and then yes. So our final account balance is $2,720. So, and also if you guys want, now that you have access to this as editors, you can copy, and this is actually a really good way to keep track of expenses for your producers. So you can always kind of blank this out and enable them to use it. So it is a good option for that. Do you guys have any questions about that so far? So from there, we're going to move on to enterprise budgets. So enterprise budgets estimate profitability for agricultural enterprises while documenting management practices, the resources and technologies used. Enterprise budgets contain estimates of production costs and returns based on the current and/or expected economic environment, as well as the management practices typical of an area. A one-page budget report summarizes key production items and prices, operating and fixed costs, plus break-even prices and yields. The budgets incorporate historical data and specialist recommendations while allowing modifications by the user. Examples of historical data include things like yields in the area and average prices. Examples of specialist recommendations can include things like fertilizer requirements for different like forages or yields or plants. And then business management requires that producers focus on financial management as much as production performance. So budget planning requires time, but can pay major dividends by identifying current or potential problems and helping find ways to solve them. So this is an example of a mobile processing unit, and I recognize that the majority of the people on here are not involved in the livestock industry, but I wanted to pull this as an example because there are a bunch of different ways to set up enterprise budgets. And what makes them so exciting is it's just that you can look at adding an additional enterprise to your operation, or if you have a producer or a client that is interested in going into value added, an enterprise budget is a really good way to see if it has the potential for profitability and what that potential is. A lot of times banks want to use that as like a forecasting method. So it's I really like enterprise budgets. Can you tell? I get real excited. I love to like calculate. Anyways, I did this one. So this one is for a mobile processing unit that I did in conjunction with some people from the Hawaii Pork Producers Association. And from there, I recognized the fact that it would be impossible to read, but you all will be receiving PDF copies of the handouts today, as well as resources that are listed in references at the end. I broke this one out for blueberries into a couple of different pieces so that you could ideally see them. This enterprise budget is courtesy of Oklahoma State University's Department of Ag Economics. The budget could be modified to accommodate blueberries elsewhere. And while I know there is not a huge ton of blueberries grown here, but I wanted to show something that was more of like, it's not really an orchard crop, but sort of orchard crop adjacent, I would say, and something that might be useful for your clients. Although if you need to, we can create enterprise budgets. Is the break-even analysis for the blueberries at the end. So it's just telling you break-even yield prices you need, and then how many pounds per acre. Average operating costs and above total costs. And then I also, like if you're buying equipment, when I do enterprise budgets, like with the previous mobile slaughter one, I like to see how long it's going to take you to pay it back. But there's, again, different ratios, and we'll get into that later. I always feel like this is the one where you lose people and they get glassy-eyed. So I wanted to make this exciting and adventurous for you all. So financial statements, this is also courtesy of Dr. Demonadoy from Oklahoma State University. So this just shows you kind of the life cycle of financial statements, which I think is really interesting because they all feed back into each other in some way, shape, or form. And realistically, you have what they call a beginning and ending balance sheet, which ideally is done on the same day at the same time of the year. And then like everything just feeds into everything. It's a continuous loop system, basically, in a way. Oh, cash flow. There are a couple of different kinds of cash flows that you can do. There's a projected or a budget, and then there's like a historical statement. So the one used most often is the cash flow budget, which is the one we're going to focus on today. Cash flow budgets consist of cash coming in and or out of the business. So when creating a cash flow projection or budget, include projections for cash inflows and outflows for both farm and non-farm activities. So if you have a spouse that works off farm, something like that, or if your client does, combining business and personal finances bring all expenses to the forefront, creating an avenue for crucial budgeting conversations. So a thoughtfully created cash flow helps you understand the business's financial standing and can provide the clarity needed to make informed decisions throughout the year. The cash flow budget is not the same as an income statement, especially an accrual income statement, and in fact, they can be quite different. The cash flow budget does not include non-cash items like depreciation, inventory changes, and changes in accounts receivable and payable. However, the cash flow budget does include principal payments, cash payments for capital assets, and new loan proceeds that income statement does not include. A farm manager can cash flow very nicely for a while by just selling a few pieces of equipment, acres of land, or just allowing accounts payable continue to build. The accrual income statement will quickly identify this situation as unprofitable, but the cash flow budget will be positive. So a positive cash flow does not necessarily mean profitability or vice versa. The cash flow budget is not a substitute for the enterprise budget. The enterprise budget will include things like depreciation and opportunity costs, both of which are not cash items and not found on the budget. So this is just an example for a cash flow for Nursery. I pulled this one from Montana State, but I redid this in terms of just specifically for a Nursery. So I spent quite a bit of time updating and changing some things. This is just an annual cash flow. So you have what your actual last year was, what you think you're going to make based off of your last year and other information that you have available in terms of like your contracts and things like that. And then it's broken out month to month to month. And then a sum of all that annual cash flows. And then you don't need to worry. This is really not necessarily relevant to this conversation, but it's there if you want to get real excited about numbers. So this is the other part of it. This is cash inflows from capital assets, cash inflows from cash outflows for the operation, which is a big one. So it helps you determine your cost of production and things like that really quickly, as well as like other household expenses you may not think of, but like that might be coming out of funds that you make from your business. So marketing costs, membership fees, all those fun things. Now we're going to move on to balance sheets. A balance sheet lists assets, liabilities, and net worth as of a certain date. Balance sheets are often like described as a snapshot of your financial condition at a certain point in time. Ideally, you want to do them around the same time every year. I mean, ideally, you really want to do it the same day every year. Like if you're particular, it would be great to do that, because think about it. If I take like a group picture of all of us today, how we look today is not how we looked a year ago, especially after this year. And then think about it 3 or 5 or 10 years ago, you looked very different then than you do now. I mean, unless you're a vampire. But most of us look very different now than we did 10 years ago. And we probably, again, if I took a photo today and then 10 years from now, I take another one, we're probably still going to look quite different. That's literally a balance sheet. That's why you generally do it. A lot of accountants or people that deal with financial statements will tell you to do it like December 31st, or in agriculture, you generally do it on like, a lot of them will do it when they do like big crop sales. So things like that. So a balance sheet is also sometimes referred to as a net worth statement, and it's made up of assets and liabilities, and both will have current and non-current. Current means 12 months or less, and then non-current generally means more than 12 months. There are, again, some caveats depending on how it's set up. Some actually have like midterm assets and midterm liabilities. Assets are things that you own, like your TV, computer, land, your house, things like that. So can any of y'all name some assets like off the top of your head that someone might have?
Farm equipment.
Okay, thank you, Emily. So these things, they belong on the balance sheet, whether these items are paid for in full or whether there is debt against them, like the farm equipment. Liabilities are things like loans, credit cards, and other obligations. And equity is the difference between assets and liabilities. I always like to think of equity as like the percentage of, let's say, that farm equipment that you actually own. So if you owe a loan that was originally $10,000, you've paid it down to $5,000. The reality is you actually have 50% equity in that tractor, let's say tractor or piece of equipment. So a lot of times I feel like you see this flashed around everywhere if you do anything with financial statements. So again, equity, sometimes called net worth, is just the difference between assets and liabilities. But I feel like that that is just shown everywhere. So here's an example of a blank farm balance sheet. Again, you're going to have links to all this stuff in your handouts that you'll receive after this program. And so it's really nice because you just set it up and you just put in your cash and checking, accounts receivable, prepaid expenses, things like that. All right. So I'm going to tell you a little story before I switch over to the balance sheet exercise for Kiana and Kai. So Kiana and Kai are a married couple who have recently transitioned over to become owners of Kiana's family farm, located on Big Island. The farm hasn't had great records kept for the last few years since Kiana's grandfather got ill. So now with Kiana and Kai taking over ownership and management of the operation, they are sorting through different records and trying to update some records in order to better make financial decisions. As a friend of Kiana's and Kai's, you're a really good friend. You are helping them sort through everything. The next slide will have different assets, liabilities, etc. that you need to place in the appropriate category. Oh, you guys are already on here. You're really good. Okay, so I have created these lists that you should be able to go in with your mouse and move, and you will just put them under either current assets, long-term assets, current liabilities, or long-term liabilities. And for this, you can feel free to unmute yourself and ask questions if you want, or even discuss with each other in the chat, or like, again, you can unmute yourself and talk that. Yeah, and there may not be enough room. You might have to stack stuff on top of each other.
So Shannon, I guess trees, like you were saying within the year. So I'm guessing that the trees would be sold within the year. Is that what would make them current assets versus long-term assets?
Yes.
Okay, thanks.
Yeah. So I will just say, like, keep in mind, this is all related to like Kiana and Kai's farm. So some things on here might not actually go under any of these. All right. So current assets, business checking account balance of 5,000. Yeah, there's not enough room for it. It's like, but it is a good idea. It's like 500 palms valued at $100 each. Yes, as long as they're sold within the year. 2,000 potted orchids valued at $35 a plant. Again, I'm assuming that I would sell these within a year. So to me, they're at the point of maturation where you're going to sell them. They're not little bitties. And 1,000 3-inch pots for seedling plants valued at 25 cents. So would you put that as like a current asset or a long-term asset?
I guess depends when you plan to sell it.
Yeah, it could be either one. I totally did that one. That was me and not Stuart. So I'll tell you, that was like some of these I was like, oh, let's see what they decide. Balloon payment for the greenhouse is a current liability. Fuel, yep, that you owe is a current liability. Labor accounts payable, yes, is 4,000. The 5-year loan for a new greenhouse at $10,000 is a long-term liability. The one that I thought I threw in here to see if anyone would catch is the 30-year loan on a house for $100,000. Because I went with I guess I should do a better job of planning this story out, but I went with the theory that the house was not necessarily on the land, but it's also for private residential use. So I would actually say that that's not a long-term liability. It wouldn't be included in here because it's a personal, not business-related expense.
Let's go back to the fuel. What about that one?
The fuel?
Yeah, 100 gallons at $3 per gallon.
You want to include it over here?
No, I don't know. That's kind of why I'm just, having a discussion.
Yeah, I mean, it could be. It depends again. I wrote this story very quickly. Yeah, I mean, I would say this could be a current asset. If I owed money on the fuel, it would be a current liability.
No, I think it's good because that's some of the thinking that when you're creating your own financial statements, you got to be a little bit clear about that.
Yeah. Yeah. I mean, that's kind of the point of this exercise, is hopefully to be somewhat interactive with the group and get them talking, even if it's in chat. Any other thoughts or questions?
So it's an asset if you have a tank full of fuel.
Yeah, because
then it's a liability if you took out a loan to purchase that fuel. You
Yeah.
still owe on the loan? Is that what?
Yeah.
It is?
So I could have done. Yeah, then it becomes, because then it zeroes out. I mean, this isn't a complete balance sheet. This is the idea is that you're basically going through someone's shoebox at this point, you know? Does that make sense, Andrea?
Yeah.
Okay. Yeah. I mean, I literally did this specifically because I just assumed, I went with the theory that we were going through old receipts. So they might not all be there. So maybe he paid cash for the gas and it's just sitting there. We don't know. Or, you know, it's all open to interpretation. But you guys were really quick at this. Thank you. All right. So we're going to move on to income statements. So an income statement measures profit or loss in a given length of time in the case of farms. This length of time is usually a year. Farmers who do not use an income statement often rely on the Schedule F from their tax return to measure their income. Since most farmers are on a cash basis for taxes, their Schedule F only shows the amount of cash sales minus cash purchases and an allowance for depreciation. Being on cash basis for income taxes is good in that it gives you a lot of flexibility in controlling the amount of taxable income that you have for the year, which is great. However, the Schedule F is actually a pretty poor tool to rely on to measure profitability, especially if you know any farmers and have done any like tax related stuff in the past. Most I want to say, I'm saying farmers just as a generalization to include everyone. I know that's not everybody. I know there's farmers, ranchers, nursery owners, and all sorts of stuff. I'm just using that as a generic term. Sorry, but it's actually a pretty poor tool to rely on because if we know anything about farmers, at least most of the ones I know, generally you want to not pay any taxes or as little as you absolutely have to. It measures the amount of cash that was handled, but it gives no hint as to whether only a portion of the crop was sold or perhaps two crops were sold. So let's say if you have a production facility and so you have enough space, I mean, if you have enough space to freeze and hold stuff for a year and then the price got really good. So you had stuff from last year, plus you've got this year's, does that make sense? So you're actually pulling stuff from last year's stock that would have been inventoried. So income statements do involve some inventory stuff. So whether all of the year's bills were paid or perhaps some of last year's, so if you owed from last year, and then whether all income earned was collected or if some of it is still owed. So an accrual adjusted income statement combines the cash basis farm records with the inventories listed in the balance sheet. So the beginning and the end of the year. So you have generally what they call a beginning and an ending balance sheet. It's only done once a year. You have the one from December 31st of 2019, and you have the one from December 31st of 2020. So it's the difference between those two. Does that make sense? So the difference between those helps to give you a true measure of profitability. So what you can learn from an income statement, when we have a good income statement, ratios and measurements on profitability, repayment capacity, and efficiency can be calculated. So these ratios and measurements are just a few of the key financial measurements needed to understand the farm business's financial health. So in addition to an income statement, a balance sheet and a statement of cash flows are required to fully analyze the farm. Okay, so here's an example of an income statement. I just pulled this one from Iowa State University. Again, there's a bunch of blank ones out there that you can fill in and that you can hand out to clients that I have. And then if they need explanations, generally when I do like balance sheets, cash flows, income statements, and then the financial ratios, that's generally a multi-part series in order to get everyone through it. But this is a very shortened version of something like that. Just so you're aware, if you're wondering why we're skimming over some stuff potentially. So you've got your income, tax, cash flows. Here's the other part of it. This is a multi-part one, like literally quite a bit. And then I didn't get the bottom in there. From all three of these, from the balance sheet, the cash flow, and the income statement, we can pull financial ratios. So financial ratios and measurements allow an individual farmer to measure and understand the strengths and weaknesses within their financial life and to benchmark their situation with a peer group. So ideally, USDA does collect some data, but it's kind of sporadic here. but there is some that you could use to throw into some of these ratios and get some base benchmarks for different industries. It is available, but it's not necessarily super readily available within the state. But you can definitely create, your clientele can definitely create it in order to like mark their own progress, if nothing else. So originally there were 16 different measures of financial readiness and health, but now there are actually 21. And lending officers and different government agencies actually use these in order to ascertain the financial health of an operation and in some cases determine whether or not they lend them money or give them financial aid. So with good financial measurements or good financial statements, excellent measures can be made in liquidity, solvency, profitability, repayment capacity, and efficiency. A balance sheet is necessary to measure liquidity and solvency. In order to measure profitability, a good accrual adjusted income statement is also needed. The statement of cash flows allows for calculations on repayment capacity. So liquidity measures deal with the upper part. This is the farm financial scorecard. I don't know if anyone else has seen any of these. Are any of y'all familiar with this? I don't know if this is something you've used in the past or not, but it's something I'm familiar with. The Center for Farm Financial Management is a group of different entities, organizations, and universities that have come up with a series of basically standards that are used in the farming industry now in order to help ascertain the health of the organization. So liquidity measurements deal with the upper part of the balance sheet. So the relationship between the assets and the current assets and the current liabilities. So by definition, liquidity is concerned with the ability of the farm business to generate sufficient cash flow to pay for family living, taxes, and debt payments. So like how quickly can you sell those potted plants in order to like pay your electric bill, pay your mortgage, pay your payments, like pay, whatever is needed. So solvency by definition is the ability to pay off all debts if the business were liquidated. So that means, but if we're getting rid of everything and we're closing the business down and it's liquidated, do we have enough to pay off all of our obligations? They deal with the relationship of the total assets and the total liabilities, as well as the net worth. 3 standard solvency ratios, which some of you may have heard of, are debt to asset ratio, equity to asset ratio, and then the debt to equity ratio. Each ratio is listed as a percentage. So measures of profitability are net farm income, rate of return on farm assets, rate on farm equity, and then operating profit. This one is often in like business speak, you'll hear it as like the return on investment. So it's in there. Repayment capacity is measured by the term debt coverage ratio and capital debt replacement margin. So these measurements come from the statement of cash flows. Net farm income plus the non-farm income must cover living income taxes and social security taxes, and then cover the payments on the term, whether that's intermediate or long-term loans. The term debt coverage ratio measures the ability to meet these payments. So if anything is left over after the payments are made, that is the capital debt replacement margin. There are 5 efficiency measures, including asset turnover rate, operating expense ratio, depreciation expense ratio, interest expense ratio, and the net farm income ratio. So other financial software and paper form products can generate similar measures. Again, I've given you the list of resources and references. So if you want to go in and calculate these, basically red is vulnerable. And if you were a regular lending agency, you would probably take a hard look at what's going on the farm. And while you can't make management decisions or anything, you can recommend whether or not someone is able to basically finance and continue to work. Yellow here means that's, again, you ought to look at it a little more, and then green is strong. So the CFFM has like set this up to be pretty easy to follow for the most part if you're used to dealing with these different ratios and the math and stuff behind them. So okay, so this is just an example. This is one that I actually used a lot in Annie's project, because people found it pretty easy to use. It looks scary, but it's really nice because it all flows together. So you have a balance sheet, you have an annual cash flow here rather than a monthly one. And all of it flows into, and then you have your income statement. So that's really nice because you have your beginning and your ending, and it just makes it easy. It does all the math for you. Oops, I skipped ahead, sorry. But then you have all of your different toggles that you can go back and forth between. I really like this one. I actually think it's both fairly sophisticated and a really user-friendly one, which again, I know looking at it, it might not look like it, but it is actually pretty user-friendly to figure it out. And they actually will like calculate all the ratios for you. So it's a nice one to have in your back pocket if you have someone that is fairly somewhat computer savvy and can like put the numbers into the spreadsheet basically. Are there any questions? And then I ended it with this one, which is basically like how they all flow back and forth. So
Shannon, as a beginning farmer, where does that person even begin to start at?
So that first exercise we did, that's where I would start. Just keep track of your basic financial records, because once you have those, you can go to like this and you can basically plug and play, like, because it will fairly simplistically add stuff up for you. So, I mean, the big thing is just start, even if they're keeping it in a shoebox, which I don't recommend, it is an option, but like the nice thing is like, if you do it, like even the simple spreadsheet that we had, you can go in and you can categorize stuff later. So did that answer your question, Andrea, or not really?
Sort of, but is there like professional people that they may want to confer with?
Yeah. So it depends on how comfortable they are with technology. Well, not even technology, but there are ag accountants that can help you set up your books. Yes. I don't know of any in Hawaii, Stuart. Are there any?
Specific ag accountants, I'm sure there might be some. The tax side gets challenging, I know.
Yeah. So again, I'm spoiled because where I previously came from, there were both ag accountants. There were ag accountants that specialized in ag and specifically like ag taxes. So yeah. But you do want to kind of know that, because there are advantages to, if you can find a good ag tax accountant, you can get way more money back. Way more money.
I guess going back to Andrea's question, one of the keys I've found is that people just got to start keeping records.
Yeah.
Even if it is, unfortunately, even if it is that shoebox, at least you get something.
Yeah,
Right?
at least it's somewhere.
Yeah. Hard to walk into an accountant and ask them for help when they have nothing to work with. They'll give you very similar to what either Shannon or I've been providing. Well, here's what you need. Go out and do it, and then come back see me.
Yeah. I mean, getting started is half the battle, but like, I don't know, like I do budgeting on my phone because I'm lazy and my phone is always with me. So like whenever I make purchases, like I have like, well, you can't see it, but like I have a free checkbook app and I have everything categorized. So like gas goes under like fuel and equipment in my like checkbook app. Again, I just use a free checkbook app, but like I can email it to myself when it comes to tax time. And I also keep like I keep like a separate receipt folder for like any business or professional development things. Honestly, getting started, I always used to say getting started was half the battle, but honestly, I'm pretty sure it's actually between 60 and 75% of the battle. But once you get started and get in the habit, it's just one of those things that like you'll figure out a way. Like I just keep it on my phone. My dad, not tech savvy, but he's got like a tiny notebook. Well, you can't see it, but he's got like a notebook that fits in his pocket. This is a bigger notebook, and that's where he writes everything down. So, and then my mom puts it into the like software. So, but it gets written down immediately when it happens, and then he gives it to mom. So
okay, I think you just kind of transitioned into my next question about like software types of things. Because if you don't know what to keep for financial records, it's hard to, I guess, even have that shoebox of receipts or whatever. So is there a difference between software programs for somebody that's like selling value added or just selling from farm gate? So at least they would know what kind of information they actually need to keep.
So, I mean, in terms of record keeping, are you talking about just like what they need to keep in terms of receipts and stuff, or like where to plug that in the software? Because the software is the same. They just have to choose what works best for them. I mean, their receipts are obviously, and what they need to keep track of is going to be different. But like, is that?
Yeah, so I guess like until I actually started doing my taxes on TurboTax, did I understand what was important to keep and what really wasn't important to keep? So are there differences between some of these programs or what and how they're selling their products for them to know what to keep, I guess?
Yeah, so I will say Easy Farm is specifically designed for people who farm. That being said, it's not specifically designed for people here. So I actually probably I'd have to double check, but I don't think I'd recommend that one just because it's definitely set up for more like row crops on the mainland kind of thing. Like my parents don't even use that. And like I'm from Florida, so like our farm is more geared probably closer to here actually, because we have like fruit trees and then we have like tomatoes and cucumbers, things like that. So QuickBooks is a really good option, and you can get a mobile version for your phone, so you can actually scan the receipts as you go. And the nice thing is once you input it, it will ask you like say you got gas for the farm and you have it tagged as that. Again, you'd have to set those categories up in your software, but it will be like, okay, so this goes on your Schedule F. Like, yes, it will automatically put it into your Schedule F so that like when it comes tax time, you pretty much have like your list of Schedule F to put into your TurboTax. And Schedule F is specifically the tax schedule for farmers. Just, I don't know how many people know that. That's why I'm saying it. So I don't know if I got any closer to your answer though, because the thing is everybody's so different. So what everyone will keep, I can imagine things like fuel, fertilizer, if they're fertilizing, even if it's organic, like all those receipts. But I mean, it will tell you like, no, you can't use that. Some of the software will, but it just depends.
I think a good starting point for any farmers, anytime money changes hands could have changed hands. Anytime you sell something or buy something, there should be a piece of paper attached to that, and that's the record you gotta be be keeping. Yeah. I don't know. Maybe this is something for the for all the other participants. Do you see an issue with your clients being that they're not really sure why they're keeping the records? What the records will be used for? I run into that sometimes. Say, yeah, you're telling me to keep this, but why? Yeah, taxes, but beyond that, why?
Well, there's a 7-year look back on taxes. And also if you end up having family members that end up needing additional medical care as we get older in particular, there's a lot of reasons to keep those receipts.
If you're committing fraud, there is no statute of limitations. But yeah, anyway, that I think that's a consideration. We're kind of jumping. I'm jumping around now, but in terms of I guess this business type of materials in general, what am I trying to say? What you've had these 6 seminars now, so you have some idea of what some products are. I guess I'm kind of asking, what would you like to do as the next step with this information? You're just going to go out and if it comes up with your client, it comes up, or if you're looking at something a little more perhaps formalized, or even within this group, within the agents and specialists and other folks that ag professionals that deal with clients, is there a need for more activities like this to try and learn more about the business and other things? I'm just making trouble for Shannon, so I'm just bringing it up.
Well, I'm going to ask the question, what did you guys think of the interactive activities? Because that's something that I was.
I really enjoyed it.
Okay. So, oh, thanks, Sharon. But yeah. So I would like real honest feedback about that. If you're not comfortable speaking here, but like email me. So if I need to edit it or change it, it would be very helpful.
I thought it was good. Worked out really well.
Thank you. Well, and with the heavy topics like this, I was really hoping to give some breaks in a way. Because if we were in real life, I would actually have had you guys in 3 different groups and like you would have physically gone and like put things on boards. So it was a virtual one. So
That's good. Thanks for doing that.
yeah, thank you.
Any other questions for Shannon on her presentation?
Okay. With that, I'm going to turn it over to Andrea.
All right. Well, thanks so much, Shannon. Really enjoyed the information as well as exercises on financial record keeping. A lot of information, a lot of numbers, but it's really important to our growers. I wanted to give a shout out again to the sponsors for the Train the Trainer events, which includes UH-CTAHR, USDA, and the Western Extension Risk Management Education Center. Again, I will send you all an email that includes the survey link for feedback for this, as well as any other events that we've hosted. And I'll also have a link for the website, and which has the resources for presentations and handouts that are included there. So thanks again, everybody. That concludes our 6 sessions for Train the Trainer Risk Management events. And I hope you guys have a wonderful day.